What's up, traders? Welcome to 7minutestocks.com, utilizing technical analysis to suggest direction based on human emotion. Today is May 9th, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is simply my opinion. Let's get started. Lots to talk about today. The first thing we're going to look at is the SPY, which is the ETF that follows the S&P 500. We're probably not going to cover the S&P 500 because the SPY does just. In addition to the SPY or the S&P 500, we have the E-mini futures that's running live right now as we speak. Right now, it's up $2.25. However, it was down earlier today, came back up all the way up here, and then now it's coming back down and now recovering. So basically, the E-mini futures are going choppy sidewards. Keep in mind tomorrow, which is going to be some of the caveats. Uncle Ben speaks tomorrow, and we have jobless claims. All right, let's get started. On the SPY, we have this symmetrical triangle. Some actually say that this is a head and shoulders pattern, and I guess it is in some ways. However, if it is a head and shoulders pattern, we had broken down. You know what? I'm just going to call this a symmetrical triangle. If not that, at least a trend line down here. We can actually get rid of this trend line here. We broke down from this trend line here, and our target price, if it was head and shoulders, is around this level here. It's just the end of this, which just so happens to coincide with my mathematical calculated level here, as well as this pivot point. So it's not, it's very far away. I don't know if we're going to get there straight down. I highly doubt it. I'm thinking we're going to have to consolidate first, just at least a little bit before we head down. Consolidation means we're going to get a pop here and there. There's going to be some pullbacks here and there, but the overall sentiment is bearish. We are in a confirmed downtrend. Okay. So now we have the dollar, and the dollar has broken out of this triangle here. And if you wanted to just call this a trend line and not a triangle, it has broken above this trend line and it has confirmed above this trend line. A lot of times what will happen, well, right now we're in a double top. A lot of times what will happen is we'll come back down to retest the trend line before going higher, just like that. I mean, we may not actually come all the way down to test the trend line, but I'm thinking at least 50% of a retrace at very minimum. And we also have these two moving averages here giving it that much more support. And as you can see in the dollar, we have this triple, kind of like a triple top here, and it's already pulling back, which is probably why the E-mini futures are getting catching a bid there. And as we all know, the dollar up, markets down, and vice versa. All right, I also want to take a look at the VIX. The VIX is in a double top, and the reason why I like to look at the VIX as of now is because there's obviously a lot of fear in the markets. I mean, that's pretty much what's driving the markets right now, and that is fear. And the VIX is the fear ETF. So right now we're kind of like in a double top for the VIX. We kind of pulled back earlier today, which gave us a little bit in the markets towards the end of the day. But right now, so far so good. We may pull back about 50%, if not actually retest this trend line here. But we may pull back, have a small pullback first before going higher. All right, next thing I want to talk about is Apple, and amazingly, they're able to save Apple once again. So the day before yesterday, we had Apple actually gapping down, opening and then closing right above. Then the next day, it came all the way down again, and it was able to close right above this trend line. And the next day again, which is today, it gapped down, and obviously they closed it up above that trend line again. So Apple is holding up pretty well. However, it is creating this bearish pattern. Remember, down move, and then we have consolidation. And if you look here, which is very interesting, you have these two moving averages kind of kissing together. That puts a lot of pressure on this bearish move here, and eventually this thing is going to crack. And if it comes all the way down here, I wouldn't be surprised. I mean, if you think about it, it's not that far away. Now, being that Apple is so strong in a bearish market as we are in now, I wouldn't be surprised that this pattern fails. However, I mean, we do have Uncle Ben speaking tomorrow, so it's obvious that Apple could definitely push up. Next week is options next week, so we really have to worry about that. But as of now, what the charts are telling me is that Apple is setting up for another down move. I know I said I was done talking about ABX. However, ABX made this nice engulfing pattern, a very bullish engulfing pattern for that matter. And as you can see from here, from this pivot point here, we found resistance. And then actually, let's take a look at this right here. Okay, check this out. If I draw a line right here on this pivot here, and I extend this all the way to the right, we move it all the way to the right here, That's your support line right there, right almost to the penny. Okay, so we get this nice bounce on nice volume. I wouldn't be surprised if ABX goes higher tomorrow. However, again, this is a contradicting analysis. I mean, for whatever reason, as soon as I open up the 7minutestocks.com account on YouTube, I'm not able to get definitive answers as to where the emotion is in the current market. I mean, we have this trend line up here and this 20 moving average giving a lot of weight on the upside, but we have this nice engulfing pattern here. If I were to play this, I would probably put in an order to buy it at 50% of today's candle, and then try it from there. We did close above this MCL line here, so that gives a bullish sentiment. And I doubt Uncle Ben is going to have any bad news. I mean, he's probably going to mention QE3 if anything. With that said, a lot of mining stocks, this is GG. A lot of mining stocks have these bullish engulfing pattern with pretty good volume. This volume isn't as good, but take a look at this. Okay, unlike ABX, if I draw a line at this pivot point here and I make it go to the right, then we move it all the way to the right here. We're almost at that line, which means I probably wouldn't take this trade. We're not in exactly a very oversold. We are oversold right now, but GG has a possibility of coming down a little bit more as opposed to ABX. And then we have GDX, which has the same exact bullish engulfing pattern, and we have very nice volume there. However, very similar to GG, if I draw a line on this pivot point here and extend it to the right, we obviously have just a little bit more to go. The next stock I want to talk about is Caterpillar. Caterpillar, right around this level here, I took profits. Caterpillar dropped back down. I put a break-even stop on the second half, and then I got stopped out. Unfortunately, I was long on Caterpillar. I have a next target here, which is this green line here, which is at the 50% of the Fibonacci at 93.12. If it gets down here, which I doubt, but if it does get down here, then I'm probably taking the trade to the long side. Last but not least, I want to talk about real quick about Baidu. Baidu, we have a gap fill here. We have a pivot point here. We also have a 236 fib line. If Baidu can get here, which I highly doubt because the prices are so far off, but if it can, for whatever reason, get down there on nice volume, then I'm taking the trade to the upside on Baidu. Obviously, it depends on the pattern. If we consolidate before we get there, then the trade's off the table. All in all, right now I am in cash. My orders are in for orders like this. The E-mini futures are up $2.50 as of now. Because we have contradicting signals, I do still believe we are in a downtrend. So my overall analysis is still bearish. But I mean, we're looking for that pullback, and then short on the pullback or try to catch the pullback. Right now we got too much news coming out, and we have E-mini futures going sideways, choppy, and everything is just right now we have contradicting signals. So staying in cash is actually not such a bad idea as of now. Tomorrow, I'm looking at a possibility of a small bounce, if not a substantial bounce. Depends on what Uncle Ben talks about in his conference. All right, and that is your 7-minute stocks update. You have a nice day. See you tomorrow.